and start off with our last paper by Calla Wiemer, who's the president of ACAES, on COVID impact and macroeconomic policy in Asia. So, Calla.
Thank you, Mike. Let me get my slides up here. Okay. Am I sharing? Yes?
Yes, you are. Yes.
Okay. So I'm going to talk more about the macroeconomic dimension of COVID and policy response. And with that, am I getting to the next slide here?
Yeah, Calla, you are sharing, but it's not a full screen share. You might want to go under slideshow on the menu on top. There you go.
There it is. Okay. So this is actually a spin-off from the textbook that I have just written to be published later this year by Cambridge University Press, called Macroeconomics for Emerging East Asia. And features of this textbook that help to frame the analysis of macroeconomic impact of COVID or any kind of shock and the policy response. Features are both internal and external balance matter for macroeconomic stability. Exchange rate and interest rate work in tandem as policy instruments. And policy space is constrained in the sense of fiscal policy with regard to debt sustainability concerns, and for monetary policies, very much the global capital liquidity environment matters. So I'm going to take this framework and think about the COVID crisis and the policy response. I'll note that there's not actually a paper on this, but I do have a series of blog posts on the Asia Economics blog. So first of all, just a few scatter plots to look at correlations between factors related to the pandemic and the GDP growth impact. Mobility loss in the left-hand quadrant is clearly very strongly correlated. This is for 2020 data, mobility loss. And we see that some economies were hit really hard, the Philippines in particular, both with respect to GDP contraction of nearly 10% and loss of mobility of more than 40%. The graph on the right looks at case numbers, so a measure of severity of disease, and the correlation here is fairly strong. Some countries barely register any disease incidents, and others have quite high, and there's a visible correlation there. I mean, I think it's noteworthy, and I see one of the questions in the Q&A is about the nature of the measures to restrict activity, mobility, impact on business. And the Philippines, clearly, you know, they have both a high degree of mobility loss and a high degree of disease incidence. So it suggests that these measures that they took that impacted economic activity did not have a very effective outcome for limiting the spread of disease. And I would say from personal experience that it to me was really clear why. I was living in the Philippines until August of this year, and lots of measures that were taken to supposedly have an impact on disease severity clearly hit the economy very strongly without impeding transmission much at all. And we don't have time to go into specifics, but I can think of many ways in which that was true. So a final scatter plot here is between export growth, and again, I guess Philippines is an outlier. Exports, because they're very heavy on service sector exports, and that was hit particularly hard. The e-government paper talked about the capacity to move to teleworking, and for a lot of the Philippines exports, that would be possible. There's a lot of business process outsourcing, a lot of voice support for overseas business activities, but you can't move it to your home if you don't have internet in your home. And so that it's not simply a matter of whether it can be done by internet, but whether people have internet in their home. And so, those services are going to be hit very hard if people can't go home and do those kinds of jobs. So export growth also, the relationship here, correlation is quite strong. We know Thailand is a big service sector exporter in the form of tourism. And so that was impacted quite a bit. Some countries had positive export growth, especially if they were able to take advantage of products that were in high demand because of the pandemic, like electronics and maybe, masks or things that were useful, items that were useful for public health purposes. So to sum up, we see a lot of variation in the outcomes in terms of the impact on the economy and the impact on the level of disease in the countries of Asia. So those were all charts that were prepared using 2020 data. In 2021, none of these correlations show up. Mobility, disease incidence, export growth, and none of them are correlated with GDP growth. So that we might ask, is this due to base effects? In other words, for those economies that contracted sharply in 2020, do we get more positive growth performance registering in 2021 just because of the low base that they're jumping off of? And the answer is no. There's no growth correlation, GDP growth between 2020 and 2021. Some countries did poorly in both years, some countries did well in both years, and some countries mixed it up from year to year. So presumably what's going on by 2021 is we're getting a lot more impact from policy responses, which also varied a great deal across country. So let's look now at the fiscal and monetary policy responses. This chart shows data for 2020 for both revenues and expenditures of public sector. And we see variation across countries. In all but one case, there was a reduction in public revenue, and that exception was Pakistan. I don't know what's going on there. It's Pakistan's a little beyond the range of countries I normally look at. But we see for many countries, the contraction in revenue exceeded 10%. For India, Indonesia, Philippines, Vietnam. So already they're deeply in the hole as far as fiscal policy. They just have to borrow more in order to continue to maintain the level of services pre-pandemic. Where we really see huge differences is in what happened with expenditures. So that in particular, the countries that had a huge amount of fiscal space going into the pandemic, Singapore and not a country, but Hong Kong, responded really strongly to increase expenditures. And so where they had room to do so, Singapore increased expenditures by nearly 80%, Hong Kong more than 30%, Japan about 20%. But most economies in Asia don't have that kind of fiscal space, and they had to be much more conservative in their responses. On monetary policy, we see also here looking at the growth rate in central bank assets, and we can see historically that growth rates for the most part are below 10% in central bank balance sheet on an annual basis. All countries, we see an upturn in 2020 in central bank balance sheet, and some really extremely sharply. So for the Philippines, monetary policy response with the central bank directly making purchases of government debt issues up very sharply. Indonesia, the same thing. Bangladesh, from what I've read, it was a matter of the central bank buying inflows of remittances that came through in very large magnitudes, and to stabilize the exchange rate, the central bank intervened on the foreign exchange market to make purchases and expand its balance sheet. I'll note here, interestingly, a couple of days ago, the governor of the Philippine Central Bank was awarded Central Banker of the Year title by The Banker magazine, which is owned by the Financial Times. So the central bank response has been very strong in the Philippines, and he's receiving commendation for that. So how do we want to think about fiscal policy space and monetary policy space? Well, the big issue in fiscal policy space is what is the debt to GDP ratio going into the pandemic, and how much room is there to increase that? And then the standard determinants for debt sustainability include also the real interest rate and the GDP growth rate. So of course, the lower the interest rate, the more you can borrow and still not run up the debt level too much. And the faster the growth rate, the quicker you can grow out of your rising debt to GDP impetus. So we'll look at that. And then for monetary policy, monetary stimulus, well, that pushes the interest rate down. That tends to motivate capital outflows, declining value of the currency, and make debt service more difficult. So monetary policy space depends on buoyancy of the currency. And we're going to look at exchange rate movement, and also look at the degree of central bank intervention using the reserve item on the balance of payments. So this is the table with respect to fiscal policy space for like 14 economies here. Right in the middle, we get the debt to GDP ratio in 2020. So this is already into the first year of the pandemic. This is a year-end figure for 2020. Of course, the countries that stand out for the highest debt to GDP ratios we're not actually worried about. It's Japan, which has enormous domestic savings that help to sustain a lot of government borrowing. And Singapore also has a high number, high debt to GDP ratio, but also the government has a very high level of assets to GDP. So again, we can exclude those as being at all concerning. For most of the region, there was pretty moderate debt to GDP ratios and a reasonable amount of fiscal space to expand spending. Probably the most worrisome were China, and of course this is an official measure, and with China we get problems with contingent liabilities and off-budget expenditures that the government has. And when the IMF looks at those kinds of indicators that go beyond just the simple debt to GDP ratio, they put up alerts on where China stands. And the same is true with Malaysia, which had a similar debt to GDP ratio as China, but we're missing a lot with this measure, and it's a borderline of becoming concerning as to the level of debt at this point. And then, for most economies, there was a fair amount of space going into it. We can look at interest rates also, and we see that Indonesia is facing the highest real interest rate. Indonesia relies heavily on foreign sources for its to fund its government debt, and so those tend to be a little more precarious. And they face a higher interest rate with not as much domestic savings to be able to support government borrowing. Now, if we look at the sustainable level of debt, that is to keep the primary balance, usually in deficit, to keep the primary balance where it is, to keep the debt to GDP ratio where it is, what is the primary balance on the fiscal budget that we need to see? So that gives us the benchmark. That's where we find our sustainable deficit in terms of the primary balance, and we see that in this column. And then we want to compare the primary balance that we actually observed in 2020 2020 and the primary balances as projected by the IMF to see where the debt levels are headed based on the current budget position. And basically we see in 2020, every single country, I believe, is exceeding its actual primary balance is exceeding the sustainable primary balance. That means that the debt to GDP ratio is going to rise. And projecting on into 2021, similarly, the numbers are quite a bit higher than the sustainable level. So we're seeing rising debt to GDP ratio coming down the pipeline and coming down the pipeline as forecasted in years to come. For China, the gap is really quite enormous between the sustainable primary balance and what we're actually witnessing. And China was already considered borderline going into the pandemic. So that sends up a certain alarm. We noted that the Philippines has had one of the toughest times. They went into the pandemic with a fairly modest debt to GDP ratio, and without some of these unmeasured concerns that China and Malaysia face. So they were in a fairly sound position going in, and they're exploiting that. And especially in 2021, we're seeing a big increase in the projected primary balance, and the debt to GDP ratios are going to be rising. So fiscal space has been exploited overall, and we're now kind of pushing beyond the margins where there's a lot of continued space that can be exploited going forward. Of course, some countries there's no concern at all, or economies, I guess is the word I should use. Taiwan has not been impacted very hard. They have not had to step up government spending. They're in no trouble at all. So we do a range of outcomes, and we can pick out the problems and the non-problems from this framework. And then we look at the monetary policy space. This figure is for 2020, and then we'll compare with 2021, the data up to middle of the year or so. So we're plotting the change in the exchange rate with depreciation measured to the right, depreciation of the domestic currency to the right, and change in reserves. This is as measured as a balance of payments flow relative to the stock of foreign reserves. So in the upper right quadrant, what we're looking at is leaning against appreciation. Currencies are appreciating in the upper right-hand quadrant, and central banks are intervening to buy foreign exchange, which is expansionary and leans against appreciation, a further appreciation of the domestic currency. And in fact, in 2020, that's where almost everybody was. I mean, a couple of minor exceptions from the experience of Indonesia and Pakistan, where currencies there are depreciating very slightly, but central banks are still intervening, and they're actually leaning into that depreciation. They're buying foreign exchange and selling local currency. They're pursuing expansionary monetary policy, and everybody has space to do that because their currencies are very buoyant. And by 2021, this is for the first through August, so for the first 8 months of the year for which data were available, and the picture is shifting. So now we're seeing a lot of economies, very few are leaning against appreciation, a few, Taiwan, Pakistan, leaning against appreciation. Most everybody has moved over into the upper right quadrant. So the currencies are depreciating now. Central banks are still not leaning against that. They're buying foreign exchange. And, you know, we're still clustered pretty close to the axis here. So depreciation is not great. Foreign exchange acquisition is not great. We're in a small space where we observe high concentration of behavior historically anyway. We see a couple of economies that have moved down into the lower right quadrant. And that means they're leaning against depreciation. So their currencies are depreciating, and central banks are selling dollars into that, buying local currency. In other words, they're moving to a more contractionary monetary policy space because their currencies are depreciating. So what would we expect to happen going forward? Well, it really depends on what happens in the US, because that determines global liquidity. That determines how much foreign capital flow is going into emerging markets. And if that reverses, if the US interest rates go up and the US becomes a bigger draw for global capital, then currencies in emerging markets in Asia more generally start to tend to depreciate with capital outflows. And central banks, if they want to stabilize that, if they want to moderate currency depreciation, they have to start selling foreign currency, buying local currency. That's contractionary from a monetary policy standpoint, and it really pulls in on their space to address pandemic concerns, and especially those economies where central bank balance sheet expansion has been important to help support the fiscal deficits, central banks buying directly government securities, then it becomes very much more difficult for a supportive response to economic growth in the face of the pandemic. So last slide here. Pandemic, to sum up, the pandemic impact on GDP growth. Clearly, mobility loss, COVID cases, export declines, they all showed strong correlation with GDP growth, which was mainly contraction in 2020. But then in 2021, none of these associations emerged at all. So it's a policy, presumably, that's taking over and becoming a bigger determinant in GDP growth performance. For fiscal policy space, it's mainly the domestic legacy that is the determinant. So how much debt do governments have going into the pandemic really influences how big they can go on fiscal stimulus. Varies greatly by economy within Asia, and it was exploited as available in 2020. Monetary policy space, the big determinant is global capital markets. In 2020, exchange rates were buoyant. Central banks were intervening to buy dollars. That's expansionary. That gave them a lot of space to respond to the pandemic. By 2021, we see less buoyancy. Currencies are depreciating. Some central banks are defending against that. Monetary policy becomes contractionary. And for 2022, it's hard to be optimistic given what we see happening in the US, which is a lot of concern about inflation and a lot more talk about policy interest rates rising in the US and what effect that will have on global capital flows. We have to imagine will not be good for emerging markets. So that's it. Thank you, Mike.
Okay. Thanks very much, Calla. We're all looking forward to that book coming out on the shelves. Sounds like a great resource.
November, supposed to be out in November.
Okay. And here to discuss it is Menzie Chinn.
Okay, thanks. I'm just about to try to share my screen. It says I cannot start the screen share while other participants are sharing, so I'm afraid.
Stop share.
Okay,
There
cool.
we go.
Okay, so here I go. See if I can get this to work. Can you all see that? And I'm gonna start. Okay. I'm going to start from the beginning. So thanks to Calla and Mike and the association for inviting me to discuss this interesting paper, or well, this interesting set of slides, which is drawn from a textbook that Calla's written on macroeconomics, specifically aimed at Asia. And so I had a little bit of an opportunity to see some of the chapters, but I'm going to focus in, of course, on the material that she covers that relates to the current and ongoing crisis. So I think of this as a first draft of the story of open economy macro for the COVID era in Asia. And I liked it a lot because really it's application of a lot of the concepts that we teach in our courses. You know, the idea of internal, external balances. There's in the chapter, there's discussion of output gaps, current account balances. So those are the meat and potatoes of sort of open economy macro. And I think she's also covered very well what policies were implemented, including not only fiscal, but showing how exchange rate and interest rate policies work in tandem as policy instruments. So it's a paper that covers both macro developments in recent years, but also how policies have evolved and when did they matter. And I think the big things that come from the discussion that she presented is a lot of the things that are going to apply in the future pertain to the policy space that's available. That is policy space. Fiscal policy is going to be constrained because of debt sustainability issues. And then on the monetary side, global capital flows are going to be, I guess, the chief constraints. So, if you think about it, we're incorporating lots of the ideas we talk about in macro, internal, external balance, but also the trilemma. And so what I'm going to do, instead of repeating what Calla's covered so expertly, is just draw out some of the things that I take from the message. It's, what's new, I think, is that Calla links mobility and case counts to GDP growth in 2020 and shows, just like within the US and other economies, there's a tight linkage between the lockdowns, the stringency, and then what happens to GDP. But essentially, over time, after a few quarters, and certainly into 2021, policy takes the fore. And I guess that's reassuring to us as open economy macroeconomists that policy matters. And so if I took another lesson from the presentation, it was, well, we kind of know expansionary fiscal policy, if you can undertake it, works, and expansionary monetary policy can also kind of work to support the economy. But coming back to that later on, it will be the question of whether you can implement those policies. To begin with, though, however, I'm going to cover two bits of speculation. I guess the first one is to ask what happens when U.S. interest rates rise, which is looking towards the future and what Calla mentioned. And then a second point is what happens to global imbalances, which is a topic that's near and dear to my heart. And I think in both cases, we're talking less about Asia, but more about, well, in part what happens to Asia, but also what happens in the advanced economies of the US, the Euro area, UK, Japan, and how that's going to impinge upon what's going to develop in Asia. And so what's new or not, macro policy matters. I think I just mentioned this all going forward. I'll mention that, I think the future depends upon how much fiscal space is available. And Calla stressed that a lot. And that depends in part to legacy issues, what has been undertaken in terms of debt accumulation in the past. But the thing to remember is why these countries accumulated debt in the past are probably some factors which are going to still operate in the future. And so if you think about the countries that had least fiscal space going forward, they're likely to be the countries that have least fiscal space going forward. And so that gives us a little hint on which countries are going to be experiencing more of the challenge of keeping their economies growing rapidly. And so as we move from a period where COVID is a crisis condition to one where it's chronic, hopefully it becomes chronic and less severe, then these issues, I think, will come to the fore. Now, to the speculations, I think the point that Calla brought up about a lot will depend upon what happens in the US. I think that's a key and important issue. And here, what I've shown you is a graph of the 3-month Treasury yield in the US. And the blue line is the actual, and the red plus signs are what the survey of professional forecasters said was going to happen to the 3-month Treasury yield. And you can see that if you, the guesses are often wrong. But if we're thinking about the last time we had the US thinking about possibly sometime in the future tightening monetary policy, that is the taper tantrum, you can see that actually, you didn't, expectations were pretty flat for a raise in the 3-month Treasury yields. And yet the mere mention by Bernanke of the fact that someday you'll have to tighten up monetary policy sent the global financial system into paroxysms, and particularly for certain countries, the Fragile Five, if you can remember that phrase being bandied about over and over again. Now you can now look to where we are at 2022, and the green plus signs are the November forecasts from the survey of professional forecasters. They don't look like they're rising really quickly. Now, if we took a survey now, they probably would be rising a little bit more quickly than before in those green plus signs, but still, it's not an incredibly rapid ascent. But I think the thing to recall is it doesn't seem to take a lot of saying you're changing the direction in order to induce a movement in the global financial cycle. That is, capital flows being pulled back towards the US and other advanced economies. Now, that being said, will I expect Asia to be hard hit? And so here I'm going to draw upon some work I've done with Joshua Eisenman and Hiro Ito. And this is the sensitivity, for instance, of interest rates in a given emerging market or less developed country to what happens in the US. So it's a gamma coefficient. And what we're trying to find out is, does that sensitivity depend upon certain factors? And how does that apply to Asia? And so, like, for instance, financial openness. The more financially open you are, that is, the less capital controls, the more you're going to be sensitive to US interest rates. That's true for the local interest rates. It's true for exchange market pressure. And those are the two key ones that are important. And so, sure, most of these Asian countries are open to varying degrees. And so they're going to be exposed to movements in US interest rates. On the other hand, a lot of them have big foreign exchange holdings. Well, once again, actually, that doesn't help you in terms of sensitivity. It happens the case that you're going to be more sensitive, once again, if you have big exchange rate holdings or foreign exchange reserve holdings. On the other hand, most of these countries pre-crisis, not all of them, had current account surpluses. So look for the countries that had surpluses or have surpluses to not be directly or largely affected by the rise in US interest rates. But those that do have current account deficits, they will. Those countries that are exposed to demand from the US, they will be highly sensitive to what happens to US interest rates. And then finally, macroprudential regulation is something that didn't come up before, but I think it might be the one thing that's a little bit different from the past. We don't know, but what we found in our research was that the more macroprudential regulation you had, the less sensitive you were to what happened in the US. But you can see there are no asterisks by those coefficients. And this is a sample up to 2014. And so I wouldn't want to put too much weight on that. But I think we have some inkling of which countries will be more exposed to what happens to US interest rates. So for your favorite Asian country, plug in these numbers and think about what if their, for instance, financial openness is high or low, or if they're highly exposed to demand from the US. The second big point, just to make this short and sweet, is a speculation about global imbalances. And so if I look to the latest World Economic Outlook, they break apart who's running surpluses and who's running deficits. And as you all know, America's running the big deficit, but essentially emerging Asia, advanced Asia, according to the IMF's classification, Japan and China, they're running surpluses. And so, surpluses have been a source of conflict in the past. And I guess it may be the case that there'll be a source of conflict again in the future. Why do I say that? Well, if I look at the data about what happened to current account balances and budget balances, essentially, what's true is going from 2019 to 2021, those countries that had the biggest positive change in their budget balances had the biggest change in the current account. That is, there's a positive association. R squared's low, but if you think about it and you put into context what Calla was saying about who has fiscal space, some countries, some big countries, are going to have to do what? They're going to have to retrench in terms of their fiscal policy, which means that their budget balances will have to improve, become less negative, or become more positive. And from this scatter plot, what does it tell you? It tells you for these countries, they're going to be holding everything else constant, increasing their current accounts balances, and a lot of that's going to be with the U.S. And these coefficients, that coefficient is just a simple scatter plot regression. If you look at actual estimates going up to about 2018, 2019, the coefficient's about 0.5 for this sort of regression, or 0.3 for emerging market countries. So I think even if I control for a whole bunch of variables, you'll find that if there's going to be consolidation, fiscal consolidation in Asia, then that's going to tend to push their current account balances towards the positive direction. Holding everything else constant, of course, there's monetary policy and exchange rate policy that's there to think about. So, I think those are two bits of speculation. Let me just sum up what I had to say is that I thank Calla for a great exposition, very clear exposition on open economy macro and applying our models to Asia's COVID experience. But I think she's exactly right that in two important dimensions, fiscal space is going to be the key to the future to what happens in these economies in terms of growth and in terms of external balances. And exactly because those factors, if you want to think about it, fiscal space was partly endogenous. So there's some factors out there that are political, economic, political, institutional, that are influencing why they had the debt to GDP levels they had before. Those factors are likely to persist. They're country specific. And so those countries that have the least fiscal space, I expect that they're going to be experiencing the biggest challenges. And then the second thing is, as everybody kind of is guessing now, the rest of the world's going to be showing up big time. In one of the other AEA sessions, there's discussion about how quiet capital markets have been considering during the COVID crisis. And I think that, we're going to see a lot of volatility exactly as the US tightens monetary policy, possibly Europe, UK, and even if it's not big changes in the interest rates, the very fact that you're changing direction is going to lead to a lot of uncertainty and volatility. But the impact on the Asian countries won't be homogeneous. It's going to be highly varied, depending exactly on these factors that Calla's outlined. So great paper, and looking forward to more. Looking forward to the book.
Okay, thanks, Menzie. We are almost out of time. We have 4 minutes left. So let me just read one of the questions we have in the Q&A, and this is for Calla. Big fiscal policy affects aggregate demand, and fiscal policy has redistributive effects. How is fiscal policy targeted towards vulnerable groups during the pandemic across the Asian countries? That's an interesting question. Can you help us out with that?
Actually, what first comes to mind is Samir's paper. I think Samir's paper got into a lot of detail about how different countries have used fiscal spending to try to shore up incomes, to try to preserve employment, to try to provide a social safety net to groups that are most impacted. I guess I would come back to from my chart that for a lot of countries, a huge loss in revenues meant just to keep the government going, to keep fiscal activity functioning at a pre-pandemic level, they had to borrow. So just maintaining the status quo was pushing countries into deficit spending and to heavier borrowing requirements. But I think Samir does a much better job in looking at the particulars of how fiscal policy was used during the pandemic. I looked only at aggregates.
Okay, good. Actually, if I could ask the question of Samir on that line, is that, looking forward, where are the best, we're looking at the next crisis of this sort, where are the best places to invest? I remember when we had the Asian financial crisis hit, we had no social safety nets really in Southeast Asia to deal with it. What have we learned from this pandemic in terms of investing in social policies to sort of mitigate the negative effect on particularly vulnerable groups?
Thank you, Michael. On the fiscal response, it is true that when we looked at these 5 countries in Southeast Asia, so anywhere between 20 to 50%, or even more actually in some countries, the share going towards social protection and labor market programs. And you see that now because there's a bit of tightening taking place because they don't have as much fiscal space as Calla was pointing out in our presentation. But what has happened, at least in 2 countries I can speak of, Indonesia and Philippines have introduced unemployment benefit scheme, for example. This is a huge deal for a country with large informal sector. They're trying to come up with how do we cover informal sector workers? What type of insurance schemes can be introduced? So again, this is a very encouraging sign, and I think countries are investing more in this type of social insurance mechanisms. Michael, over to you.
Okay. Well, I guess we only have 1 more minute, and I'd like to invite Calla to talk about next year, if I might, in New Orleans for our next session, because this one's been an excellent one, and she did a great job putting together. What are the plans for ACAS?
Well, I'm glad you say New Orleans, because we would all really like to be in New Orleans next year. And I so very much hope it turns out that way. It's a lot more fun to actually meet face to face with people. But I'm open to ideas. So people consider, if you have an idea, if you'd like to organize our session next year, let me know and we'll talk about it. Okay, great. Thanks. And let me thank all of the speakers and discussants. I think we had really a lot of food for thought here on actually a very important area. So thanks everybody for attending. And Yao Li, did you want to say something?
No, sorry, accidentally. I was going to clap.
Okay, good. All right, well, great. And I hope to see everyone in person in New Orleans. We hope it'll be great to see everyone in person. So, bye-bye.